Good afternoon, everyone, and welcome to Stock Market Today. It's Alexis, Garcia, and Ed Carson here to break down the market action in today's session for Tuesday, July 23rd. And Ed, we are waiting for big earnings from Tesla and Google, but what do you have on tap for us today?
Yeah, I know everybody looks at the Titans, but let's three stocks that were actually in buy zones today: GE Aerospace, HCA Healthcare, and Pentair.
All right, we'll get to those stocks, but first, let's check in on the major indexes. The Nasdaq closing the day down fractionally today. The S&P 500 also closing down about 0.2%, and the Dow also down about 0.1%. So Ed, let's dive in a little deeper here, starting with the Nasdaq. Again, edging slightly lower today, but hanging tight at that 18,000 level.
Yeah, we still don't really know if the big techs are going to take a longer break, which they could deserve after the big run they've had, or if they'll start running up again. There are a number of stocks that sort of hit resistance around their 21-day lines or other key levels today. You know, a lot of big earnings are coming out, as you're mentioning. I mean, you know, and not just today, over the next week. So a little bit of caution's order on that side. Obviously, this is not what's really leading the market right now, and it's not doing that badly. So, you know, I just have to wait and see. It's not this, you know, if it decisively breaks below this range, that would be an issue. If it started moving, you know, higher from here, might see a lot of stocks moving. But right now, it's just sort of like just consolidating.
All right, well, let's check on in with the S&P 500. And as you mentioned, a lot of earnings this week, and on top of everything else that's going on out there. But this one again down just slightly and approaching that 21-day line.
Yeah, this is doing a little better than the NASDAQ, which is more tech exposed. But look, this is really close to record highs. I mean, one good day and we're right up there. So it's hard to make too much of that. It's you know, it had gotten pretty high, these indexes, and are now pausing, but it's finding support in a nice area.
All right, well, let's check in on the cues then, Ed. Again, this down about 0.4% today, closing below that 21-day moving average, but still looking good after this breakout back here in May.
Yeah, I mean, it's still looking fine. I mean, like the NASDAQ, it's hitting resistance to 21-day line, and we'll just have to see. And 50-day, it would be support. It wouldn't be a shock to see this come down. Again, just a couple of weeks ago, this was really extended, the Qs and the NASDAQ from the 50-day line. Now it's not so much. And, you know, maybe that'll be support, maybe it won't. That wasn't support back in April. It wasn't support late last year, but other times it has been. So, you know, it's just a wait and see. Just not a place you really to be. I mean, it's one thing if you're holding positions, but not necessarily a place you want to be adding to right now.
All right, let's take a look then at DIA. That's the Dow Jones Spider ETF. Again, this one down slightly today, but holding tight at that 10-day line and still technically in a buy zone.
Yeah, still looking pretty good here. Obviously, this is traditionally has lagged quite a bit for a long time. You can see that relative strength line was only in the last couple of weeks, but you know, it's showing some of the strength outside of tech.
All right, let's hop on over then to SPY really quickly, and sort of the same story here, just hanging tight.
Absolutely, just hanging tight.
All right, let's check in on market breadth with RSP. So Ed, what are your thoughts here?
You know, there wasn't much difference between RSP and some of the other ones. This is holding right near sort of those record highs, the previous ones. So this is still acting well, a little bit like everything else, just taking a little bit of breather.
All right, and anything to say about QQ, the equal weight NASDAQ?
Yeah, I mean, that's finding support around the 50-day line. That hadn't got it as extended. It hasn't fallen maybe as much, but it's also just, you know, again, a little bit right by the old highs. As you know, so it's not just the mega caps that are taking a break, but it is not falling apart by any means.
All right, let's take a look at small caps really quickly. And having a nice day today, really powerful move really over the last week. And are you looking at this 220 level then as maybe a place where we can see if it can stay above?
Yeah, it'd be nice if you could do that. Maybe consolidate for a little while because it's had a big run. Really just bounced right off the 10-day line. I mean, all of a sudden this has just come out of nowhere. Just could not get above that 50-day line, at least sustain just for weeks every time it would get there. And then suddenly it's moved. That's been really impressive. And it's just something that investors needed to recognize that the market was suddenly, rotating maybe more seriously this time.
All right, great. Let's take a look at one more, and that is the mid-cap ETF. This one, again, really shooting up over the last week, up slightly today, about 0.2%, and just right at that buy zone.
Yeah, not as strong as a small cap, so pretty darn good. Again, there's a lot of strength outside of tech, outside of some of the titans, and it's nice to see.
All right, let's take a look at some sectors then, starting with semis, SMH. This down about 1.1% today, trading at that 50-day line, Ed, after really doing so well over the last few weeks.
Yeah, I mean, obviously there was a lot of weakness last week. There was a lot of headwinds that came in. It hasn't fallen apart here. I mean, there's some chip news, but it's not like NVIDIA reversed from a key level today. It's not like there's not a lot of massive names that are coming out this week, but they'll still take their cues, what Google has to say, and then what next week, what Amazon and Microsoft and Meta have to say, what they have to say about capital spending is going to be important for these chip names that have been so AI, got this huge AI tailwind.
That's right. And as we mentioned on our show, earnings cheat sheet, always a good idea to be taking a look at other sectors or stocks that may affect the ones in your portfolio, because you never know what the ripple effect could be. So got to get that plug in there, Ed.
Absolutely.
Let's take a look at home builders, and this one up nice today, about 0.4% in that buy zone after breaking out here of this double bottom base. So as you mentioned, we're seeing this rotation. Industrials is looking pretty good right now.
Yeah, I mean, home builders really doing well. A lot of these non-tech sectors, the whole construction area, it's not just the builders, it's also housing-related retailers, building materials, infrastructure. There's a lot of things that are doing well in the construction space with interest rates sort of, after they come down quite a bit.
All right, let's hop on over to XLI. Again, that's another industrial ETF. This one down slightly today, about 0.2%. But as you can see, just really been having a nice run here over the last couple weeks.
Yeah, it's setting up. GE is the top component in that ETF. And there's a lot of things. There's actually a lot of things that you wouldn't consider industrials in this name. But there was definitely some PNR. Is another company that I believe is an XLI, certainly would qualify to be in there. And so there's definitely strength in this area as well.
All right, one more on our list. That's XLV. That's the healthcare sector ETF. Again, this one down fractionally today, but looking really good over the last couple weeks and still technically actionable.
There's a lot of things that are working all of a sudden because it was sort of hit or miss what was working. Now you've got health insurers and hospitals, which including HCA, biotechs and drug makers are doing reasonably well as well, and they've done pretty well, longer term. So this is a nice sector to be looking at here.
All right, well, let's get into the individual stocks, starting with GE Aerospace. They released earnings today. Earnings jumped about 76% versus a year ago. Revenue's up nice too. And, they're really kind of getting a bump from all of Boeing's troubles over the last couple of years. So, Ed, we can see powerful move today, up about 5.7% and breaking out.
Early in the day, there was a chance you could have maybe bought a trend line or some of these short-term highs. But to be honest, that was pretty early in the trading day, to be fair. And often you say, like, well, maybe you should wait half an hour because you never know. Because there were some other stocks that reversed lower today after having solid gains. So nice breakout here. Relative strength line, which had lagged for a couple months, but really that's after a big upsurge. I mean, this was a pretty tight base. The market had kept going up, so it wasn't like this was really lagging. It just was taking a break. This is the first report for GE Aerospace as a standalone company. I think technically this was a 15-year high because it's the same ticker, but let's face it, this is basically a brand new. From the concept of this being GE Aerospace, this is a new high. The strong earnings growth. The orders were strong as well on the commercial side. Because Boeing struggles with deliveries means that airlines are spending more on aftermarket parts, and that's actually a big business. Yeah, they sell brand new jet engines, but a lot of their business is repair work, maintenance, extra parts. And as you were saying, that's been a big help. So nice move. This was our stock of the day. This was also added to Swing Trader today.
Also nice to see all the volume here behind this move.
Absolutely.
And let's take a look then at HCA Healthcare. Again, another one reporting earnings today, up about 4.4%. And in that buy zone, which was about 335.83 was that buy point.
Yeah, I mean, that's technically still valid because it didn't quite really get there, especially because it didn't close into the automatic sell zone. Probably could have found an earlier entry way back when. So it was sort of holding there. Nice move here. Strong earnings. There seems to be more companies are spending money on medical care. There's this demand. I mean, more patients are spending more on medical care. And that's good because the more discretionary stuff is usually the higher margin things for hospitals. Emergency rooms, those can often be money pits. But if you're going in there and getting, elective surgery or more surgeries, that's where hospitals can do well. Strong volume here as well. A little bit of acceleration earnings. And also, this is also helping. We also saw Tenet Healthcare, which reports tomorrow, and UHS. So they also moved flashing buy signals ahead of their earnings later this week. So again, this group, it's 61, but there's definitely some names that have been coming along and been doing pretty well in the last few months.
All right, let's round it out with Pentair then. Another one jumping on earnings about 9%, breaking out of this cut base with an 85.84 buy point. And this one does a lot of pool spa equipment, and it seems like their pool segment's really rebounded. So I guess people are really investing in some leisure there at home. But what are your thoughts on this one, Ed? Because relative strength seems lagging a little bit up until the last couple of weeks, but
that is issue because again, this was basing. It tried to move and it didn't really go out. It had a little longer base and a deeper base than GE did, where GE was tight, and GE also had a more powerful run before that. I mean, it's something like, but we're seeing now some of these industrial names. There's a number of them that are coming up over the next week. Some of them already reported. So it's just important to look. While the group is 66, there's actually a number of them that are right around buy points. Just something to be watching for. RS line is getting a bounce back. There have been, a number of decent volume days in the last few weeks. So that's a positive. Solid earnings growth. The revenue growth, not so great. But it's definitely an area that people should be watching. People may not have been paying attention to some of these sectors, but they actually can go on some decent runs here and acting well.
All right, Ed. Well, it doesn't look like Google or Tesla earnings are out yet.
Oh,
but
they are.
Oh, they are. Okay. Well, you must be on a different internet than me, a better internet. Well, let's check in on Google then. This one is down slightly after hours, but tell us about Google earnings.
It looked like they were better than expected. Revenues, well, I haven't looked at the details. I mean, honestly, I've been a little distracted, but with the, but it seems the headline. So I don't know what the individual names are. I don't know things. I don't know what color they'll give or on CapEx or other things. This was hitting resistance. The 21-day line of first test, the 50-day, 10-week line. This will be important for Microsoft, Amazon, and Meta. So how this one plays out, that could have a big swing on things. So just sort of holding steady right now. Maybe a little later on, it'll take more aggressive move.
Absolutely. And this one was down slightly today. And we got some news that the Wiz acquisition, that was a cybersecurity firm, that deal looks like it is fizzling. So again, looks like Google better than expected. We'll keep an eye on that. And then Tesla as well coming in. This one's down about 4% right now after hours. And so, Ed, what do you have for us on Tesla?
Yeah, I'm not sure what's going on. They missed on earnings. They beat on revenue. I don't know what the reason was. I know that there might be some severance costs, so I don't know. I just don't know how meaningful that'll end up being. So there's at least some knee-jerk selling, but the real issue is what they say on the conference call. And so I would have said this if this were up 10% or down 10%. You don't know what they're going to say. So it could very much reverse. And then this one could, in particular, because there's so many things going on, it's setting up pretty nicely. Honestly, if it goes above today's regular session high, that's arguably would be an early entry in this handle that it's sort of formed. Obviously, it's not doing that now. But it could still do with, if it fell a fair amount, it would still look okay technically, but a lot to wait for. Again, the conference call is at 5:30 Eastern. That'll be followed live here. We'll be following that one live, at investors.com, but just a knee-jerk reaction right now.
Right. And again, I think investors are really going to be looking to Elon's comments on robo taxis and that cheaper EV model. Any other thoughts about what investors should be looking for with Tesla and Elon's comments?
I mean, they're going to be looking for everything about robo taxis, 2024 deliveries. When are these models, affordable models, going to start coming in? Robot. Again, we may not get answers, and they may be more vibes. Like, honestly, sometimes people literally will talk about what is Elon Musk's mood, how excited is he, how despondent is he. It really can't sort of, color the tone of the call as how into it he is. But we'll just have to see. It's like obviously people are betting on big things in the future, and so they want to hear about those things. But at the same time, it's not clear he can provide answers that would sway bulls or sway bears. It just sort of is what it is. So, but it's always fascinating to on those calls.
Well, as you know, William O'Neill always famously said, follow the facts and not the market vibes, right? So thank you so much for your insights today, Ed. That's it for now. We'll be back with more market analysis tomorrow morning, starting with IBD Live. You can head on over to investors.com/IBD Live for all the details there. And we'll see you again soon.